Hey everyone, welcome to another episode of YIN'S Squawk Box. In this episode, we're going to be talking about what's happening in the market in the past 3 to 4 weeks and why have I not been involved. Let's start from the chart. This is S&P 500 ETF Trust and it tracks the S&P 500 index. Today, we're at 284 and I believe that wraps up this little bit of a capitulation in the market in the past 2 to 3 days. I actually wouldn't worry about this drop a whole lot. Some connections on the trading floor, as they have been asking me, am I worried about this? Some even say they've seen this chart settle to a short side. For me, I'm not too worried about that, and here is why. If you look at the chart, right, if you're an alpha buyer such as myself, you would have involved here. How do you know to do that? Well, A, you have a trading algorithm. B, if you don't know the trading algorithm, you're looking at this pivot. Let's put a cross, and that's your pivot. That's your reference point. This 230 level, and that's going to be a big level. People say that if it breaks, it's going to go to the downside. I respectfully disagree, right? The first thing you're going to see when it comes to a strong daily support is you're going to see a tail through, and then you're going to see some short setup trading to the downside. But here, we do not have that setup. We tail through, we come back up, we form a V bottom, that's your buying spot, comes back up, and comes back up all the way here. Now, if you zoom this in a little bit more, you will actually see that this level get tested twice. Now, this day and the high of that day is 294.88. Let's put a cross. Let's put a horizontal line. Why that's interesting, right? At this day in particular, you don't necessarily know that's important. But here, it tested twice. It didn't go through. It come back down. So now you have a confirmation. It is interesting because this level is actually a previous resistance. On this day, let's put a cross, as well as on this day, let's put a cross. Something like that is definitely interesting. Previous daily chart resistance will most likely going to form another resistance, especially in a volatile market such as we're in right now. So from this top here, let's put across all the way to what we are having today. I would say that's a pretty big drop down and then a pretty good recovery. If you look at the percentage chart, right, this is the percentile. From this cross before the pandemic all the way down here, that's about 30% drop. That's not a good drop. That's a pretty big drop. And I think it's within a certain amount of confidence that this does not happen a whole lot in the past, right? If you look at the data, this probably happens once or twice in the past 20 years. So with that being said, I want to point out that this is an unlikely event. Right? It's not something that happens every day. And if you start a chart from this bottom, and you can see that this is a 30% gain in this past month, especially when we're coming out of this pandemic on March 20th. This is actually going to be considered a good amount of bouncing back. It's not at all a surprise that we see some volatility coming in the past 2 to 3 weeks, and the stock has been wiggling around before this 230 level. So something like that is definitely interesting. I wouldn't say there's a whole lot of worry in front of us. I would say the market still bounced back up pretty quickly. And I would say it's much more quickly than most people expected. Over long run, I would say that eventually this volatility here in front of this 230 will resolve. Let's get rid of this percentile. At this particular level we're looking at is 295. After 295, we're pretty much looking at 300. And that 300 is interesting because that's where this moving average lead. Right? It leads us to this next resistance. I don't want to be too optimistic right now, but over the long run, I think we can actually see S&P 500 coming back up to 320 somewhere here, and perhaps 330 somewhere here. So there's your benchmark, and I would expect that the strength to persist in the stock market that we're in right now. So there you go. I hope you like this Squawk box. It serves as a recap for this past 2 to 3 weeks. Me personally, I'm not a whole lot involved in the past month because I already made my buy here. Let's put a cross. I already made my buy here. Let's put a cross. And pretty much I think I added all the way here. Let's put a horizontal line. And that's my trade. I think that pretty much wraps up my trade this year. I probably won't do a whole lot for the rest of the year. And I would say that is a good spot, at least for someone such as myself. I actually sold some a little bit here, and I think that's a good time for me to move my money from capital market account to cash flow account. I didn't completely liquidate it. I still have a whole lot of percentage in there. I think it's a number between 70% to 80%, and I'm still involved in stock market. It's just not that heavy. So there you go. I hope you liked today's episode. Stay tuned, and I'll see you in the next episode.